Today is Tuesday, March 18th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and let's get into it. I kept my portfolio completely the same since my last update. I'm pretty much right at 95% invested, so if I wanted to make any changes, I would either have to trim or sell out of one or multiple of my current positions. There is always a possibility that I end up finding a position that I ultimately like better than one of them that's currently in my portfolio. I definitely feel confident about my 14 current positions, but I do always keep my eye out just in case that situation comes up where I might want to swap one out. If we take a look at the SPY chart, that blue arrow is going to represent where the SPY price was for the last update, and at that point it had made it above the 5-day, but it had yet to get above the longer term green trend line. On Monday, the SPY price was able to get above that longer term green trend line, which was definitely an encouraging sign. And then today the markets got dragged down lower, so it's now down below that trend line and also below the 5-day. So at Monday's close, we're looking really good, and then after today, not so much. That could be due in part to the lower US retail sales that came out this morning. And then we have Jerome Powell's Fed speech tomorrow at 2:30. Not much should come of that, but the markets still seem to be a little bit nervous about it. What we definitely don't want to do is end up making lower lows. If the market does continue to go down, I don't think it's necessarily going to trigger a mass sell-off, but as long as we don't make lower lows, we should still be okay. It certainly has some room to go down without actually breaking the previous low, and it would take a 1.78% loss to get there. An encouraging sign that we do have right now for a bullish market reversal is the MACD line is pretty much the closest that it's been to the signal line since the sell-off started. If we go back for the past year, you'll see that all 5 of the major crossovers all had bull runs after them, so we'll definitely keep an eye on that and see if the crossover happens. Like I mentioned earlier, the US retail sales did come in lower than expected at only a 0.2% increase versus the expected 0.6. Tomorrow we have Jerome Powell's Fed rate decision, which is going to be at 2:30, and then on Thursday we're going to have the initial jobless claims and existing home sales. Definitely the biggest thing on there is going to be Jerome Powell's Fed speech. Like I said earlier, not much should come of it, but you never really know, so it's definitely going to be worth checking out. These are going to be all 14 of my current positions. Right now, Meta, Nvidia, Microsoft, PayPal, and Costco make up my top 5, and those are going to make up 54.67% of my portfolio. I do plan on continuing keeping everything the same. Right now, I have 94.83% of my portfolio invested, which leaves me with 5.17 sitting in cash. Since Monday, Pershing Square had a gain of 0.94%. My portfolio had a loss of 1.75, and the S&P 500 saw a loss of 0.38, which brings us year to date. Pershing Square is at a loss of 1.25. My portfolio has a loss of 3.62, and the S&P 500 is at a loss of 4.33. That's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.